Hello Wolfpack, we're back here on Bitcoin. Before we get into the episode, I want to talk quickly about a few things. First of all, if you want more from the Wolves of Crypto YouTube channel, you can join up to Wolves of Crypto VIP using the join button at the bottom of this video. If you're on a PC, click the button, you'll get access to altcoin trading signals, a lecture on market psychology, and much, much more. Also, if you want to take advantage of the bear market to become a trader, go ahead and check out the Become a Trader course on the cryptoacademy.courses website, where you can learn how to trade and hone your TA skills developed by myself and Mega Whale Crypto. Without further ado, let's get into the video here. You guys know the drill on Bitcoin. I've gone over it a lot. I'm not going to go over it too much more. Pretty simple stuff, really. We're in a range between 32.6k and 28.6k. If we break above 32.6k, there is a bullish scenario that will take place that we'll go over at the end of the video or towards the end of the video. And if we break below 28.6k, there is a bearish scenario that will take place, which is continuating the bear market as we expect. Now, that's going to happen sooner or later, in my opinion, but if it happens sooner, it doesn't matter whether it happens sooner or later, we will be ending up at 24k, as that is the next major level of horizontal support on a drop below 28.6. So 32.6, 28.6, you guys know the drill at this point. That's what it is for Bitcoin. Currently, we're not really seeing anything too special on the chart, aside from this range and aside from the fact that the Bollinger Bands are compressing tightly. Now, this is an indicative of the fact that a move is on the way shortly. Unfortunately, there's no way to know exactly when it will happen, but when the Bollinger Bands squeeze or tighten or whatever you want to call it, when they compress, and when you see declining volume while that happens, particularly, which we are seeing right now, you can see this volume is actually slightly on the decline here. That is indicative of a move on the way shortly. Don't know exactly when, but it is on the way. There are a few things we can look at to determine when that move will happen. First and foremost, interest rates in the United States of America will be having, or I shouldn't say they'll be rising, but most likely they will be rising on June 16th, 2022. Now, the last time we had an interest rate hike was May 5th, 2022. And as you can see, on May 5th, that actually started this local downtrend, right? So May 5th was this red candle here that took us all the way from 39k, and in the week that followed, we actually ended up all the way down in the mid 20,000s, all the way from 39, right? So that interest rates decision really sparked a downwards trend there for Bitcoin. That was a 50 basis point hike. And as we're going into this next decision, which is basically just under 2 weeks, we have to ask the question, well, maybe that will start a further downwards trend. Maybe that will be the next move downwards, or maybe it will be the next leg upwards as we see interest rates perhaps being, pulled back and stopped a little bit from rising too much as we come up on the midterm elections in the USA. Who knows? It's very hard to say. What I can say is that the market itself, as seen by the bond yields, is at this point pricing in a further interest rate hike. However, there is some stagnation here, right? So not only is, the bond yields have, for example, returned to levels we haven't seen since June 2019. And so it is quite clear that interest rates will need to be hiked more in the future, as the market is kind of predicting. However, ever since basically mid-April, we have seen a stagnation here on the bond yields. This is interesting, right? Because bond yields are basically a very good predictor from the market of where interest rates will go. And since we've seen this stagnate, going sideways mainly, maybe this is indicative of the fact that maybe, just maybe, the Federal Reserve might slow down on the interest rate hikes here, which might give Bitcoin room for a rally above 32.6k. It's very hard to say for certain. Looking at the traditional markets, for example, the S&P 500, really not much to look at. We're still in a downwards trend. We're still creating lower highs. There's not much going on there. If we can break above, say, 4,300, that would be a higher high, and we could be, at serious potential to form some sort of inverted head and shoulders pattern from that point, through which we could see a rally, which would be what you call a pre-recession rally, which could drive Bitcoin upwards a bit. Now, you do have to consider that Bitcoin is not due to bottom out as per the 4-year cycle theory until November, right? So those of you who don't watch my content, which, by the way, about 80% of my viewers are subscribers to the channel. So again, if you're not subscribed, go ahead and subscribe. But, the point is, most people watch my content here. Most people will know what this is. This is the 4-year cycle theory. It's a theory based on the halving on Bitcoin. Every 4 years, we see a bull market. Out of the 4 years, 3 years a bear market, 1 year a bull market. That theory is predicted by date ranges. That date range trend is predicting that the bottom on Bitcoin, the estimated bottom on Bitcoin, will be in November, give or take a month. And so we've got a few months here until November. Right, I speak about this quite a lot. We've got a few months here until November. It's only June. And so there might be something in the way here, in between. What needs to happen in between? We could very well see a bounce. And that interest rates information, the fact that, bond yields are slowing down, they're not rising as fast as they usually do. And interest rates are only, going to be making a decision in 14 days. And with the midterms coming up in the USA, potentially, just maybe, we could be seeing some sort of bounce here on Bitcoin as the pressure on the traditional markets is perhaps released for a little bit, at least for a couple of months, to bring us closer to that November bottom through which we can drop later in the year. Who knows? Now, if that were to happen, we would need to be seeing 32.6K as confirmation. Nothing is confirmed until we break above that level, just as nothing is confirmed until we break above 28.5K. But I would say it's not overly unlikely at this point. I actually go ahead and say it's probably a bit more likely than not that we do see a bounce here on Bitcoin above 32.6K. Now, again, what I say to you guys and what I say quite often here is, don't trade ranges, don't trade tight ranges on major support. Volatility comes with these ranges. It's not a safe range to be trading. You can see with these long wicks to the downside, this is a very volatile range. And 28.6K, although it's been a major support zone for Bitcoin, if we're looking at a major support zone just above us, like 30K, which is basically the agreed upon level by most of the market, the amount of wicks we see up and down below the support zone is just really consolidating that fact that trading a range is very risky, especially when it's on major support or major resistance. And so at this point, what I would say to you, and I even say it to my VIP members, and by the way, I release an altcoin trading signal every second day, but I even say to the VIP members who are paying for altcoin trading signals, guys, if I'm honest with you, I'm not trading right now. I'm not trading. I'm actually waiting until Bitcoin breaks above 32.6K or if it breaks below 28.6K. I'm not trading right now, and so I don't suggest that you guys trade. Now, people think, well, you're a trader. How can't you be trading? Well, as a trader, I understand that the risk in trading in this range is much, much higher than the risk of trading during a breakdown and breakout, right? I am a breakdown and breakout trader because that's when the risk is the lowest as a trader, right? So what's the point of me sitting here and wasting my time trading for minimal profits while I can just trade when it breaks out or breaks down and make a massive amount of profit in a matter of 24 hours, right? The more profit that I could have made in this 2-week period, there's no point. And so if I'm telling you guys I'm not trading right now, that should be indicative of the fact that maybe you guys shouldn't be trading right now because I am a career trader. So 32.6, 28.6, what could happen if we break above, right? So I'm saying that even though I'm not willing to put my money on the line in this region in order to follow through with an idea that something will play out here, I'm still saying that, hey, I think it's slightly more likely based on the 4-year cycle that we break out above 32.6K here. Let's see why that is the case. Well, first and foremost, we're following a fractal quite strictly through which we were following in the previous bull markets, and we can look at that now. So the fractal is basically this. In 2014, we had a 5-step move. In 2018, we had a 5-step move. Right now, on the second step of the 5-step move as per the fractal, right? The fractal was this. We lose the uptrending line, right? So first and foremost, we form an uptrending line on Bitcoin. This is after the bull market in 2014. We lose it. We consolidate on support. We bounce up and reject from the green line, which is a 200-day SMA. And then we consolidate and support once more. And then we drop down to the bear market bottom. 2018, we did the same thing. Formed an uptrending line, lost it, break back above the uptrending line briefly and touch the 200-day SMA. Right, consolidate for a bit more, and then step 5, crash to the bear market support. We're on step 2 of this, and so right now, we're at kind of a crossroad on Bitcoin. Well, do we break 32.6K and hence continue this fractal and hence break back up to the 200-day SMA and retest it, which could be at 38K before moving downwards, or do we just crash downwards? I think a lot of this actually depends on the interest rates decision in 2 weeks, but that's the theory, right? So the theory is, well, hey, we're quite far away from the Bitcoin bottom. If we're using the 4-year cycle as a predictor, the Bitcoin bottom should be, it's not certain, it could be below this, but it should be at the 200-week SMA, which is currently in the low 20K region, right? And so 6 months away from the bottom or 5 months away from the bottom, and we've only got another, 6 or 7K to drop. It seems like we need something in the middle here to kind of draw out the time a little bit before we bottom out as per the 4-year cycle theory. And I think that this bounce that we've kind of hinted at here would be the perfect thing to kind of waste a bit of time on Bitcoin and trap the last little bunch of people which we'd need to drop down to that level. Because right now, it's pretty clear there's a lot of people willing to buy in this region, and there's not many people willing to sell in this region. In fact, the entire market is kind of on the fence collectively in this range. And so if we see one more pump, that might trick people into thinking, oh, well, the bear market bottom's in, I'm going to jump back into Bitcoin, I'm going to jump back into altcoins. They all get trapped out here, and then we drop down finally towards the bear market bottom later in the year, and that could be the actual bottom, and then we can consolidate for a while and jump back up in the year of 2023. So let's see what happens there. There is a strong potential of that. I go over it quite a lot. Now the range is quite boring right now. Everyone's aware of that, and that's why you can take the opportunity to actually focus on your skills, your fundamental skills in TA, hone your abilities, hone your whatever. And that's why I'm looking at the Crypto Academy course for a lot of people. Right, I'm not just shilling it blamelessly. It's actually the logical thing to do. I always recommend to people, when the market's boring, when nothing's happening, when you're in a range, take your mind off the charts. Understand that, hey, I'm going to set up some altcoin trades here, add to your watch list, add to your technical analysis capabilities, and then come back when the market is broken out or broken down, and as fast as possible, try to make some quick bucks here. But the monthly chart is quite interesting as well, and I want to take a brief look into the monthly chart, and then we can look at the 50 SMA, which I've got up over here, and the Ichimoku cloud on the 5-day chart, all of which are new information that we haven't looked up too much. Now, the monthly chart, 21 EMA is the critical MA on the monthly chart. As you can see, every time we've interacted with this MA in the past, for example, in previous bear markets, we've actually dropped down around 50%. Now, even in the COVID drop, we dropped down 50%, and then breaking it to the upside, it led bull markets on 2 occasions. So every time we interact with this line, we lead to a major correction or a major pump. We've actually interacted with this line once more. We've dropped below it on the last monthly candle close, and now we're very well in steep correction. And if it's anything like the last cycles, right? So in we'll look at here. In 2014, we saw a 60% correction. In 2018, we saw a 48% correction. We'll just say 50. And in 2020, we saw a 48% correction. We'll just say 50. So 60% correction, 50% correction, 50% correction. Right now, if we saw a 50% correction from that line, let's just say 40% for diminishing returns, we would see the 200-week SMA, which is as predicted by the 4-year cycle theory. So the monthly chart is now confirming a 4-year-long sell signal, a sell signal we haven't seen in 4 years in a bear market, and a sell signal we haven't seen in 2 years as per the COVID drop, and it is indicating that we'll go downwards to at least the 200-week SMA as per the 4-year cycle. Moving forward a little bit further, what we can see, and this is going into the argument of, well, how do we know when we're back in a bull market, right? What if the market bottoms out a bit more early than expected? How do we know we're back in a bull market? Well, the obvious thing to look at is the 50-week SMA. Okay, and the reason being is because every time we drop below the 50-week SMA, we end up at the bear market bottom, right? We've seen that on a few occasions here, and that bear market bottom actually comes from, or stems from, let's just look into it right now, the 200-week SMA. So every time we drop below the 50-week, we end up at the 200, and we're expecting that to happen once again. But backing up a little bit here and going back and retracing, what we can see is that every time we break above the 50-week SMA, we enter a bull market, or enter a bullish phase at least. So what we can see is that 2014 bull market top, dropped down. When we broke above the 50-week, that was the ultimate buy signal, and we ended up skyrocketing, right? Same thing happened here in 2018. When we broke above the 50-week, we ended up skyrocketing here. Now, this pump, the reason why we dropped below this during the 2020 period here is because of the COVID drop. I don't think that would have happened if the charts were normal, if that wasn't a black swan event. So I'm going to go ahead and say you can almost say the price action just did that. I don't think we actually, in a valid way lost the 50-week SMA in 2020. The COVID drop was kind of an unfair loss of that line. And so I would say that when we broke above it here in 2018, we didn't lose it again until about December 2022, which is when the bear market started. And so given this logic, when we break above the 50-week SMA, that would be a trigger for a renewed bull market on Bitcoin, right? It wouldn't be a trigger when we bottom out of 200. It wouldn't be a trigger when we bottom out of 12K or whatever. The trigger is when we break above the 50-week SMA, that is a renewed bull market on Bitcoin. And we could also see another way of kind of looking at this, a bit more complicated way of looking at it, is the Ichimoku cloud on the 5-day chart. What you'll notice is that when we break down after the initial Deadcat bounce in the bull market, we don't actually break above the Ichimoku cloud until, kind of the end to the extreme bear market phase. We saw that here in 2015, and we saw that here in 2018. And even during the COVID drop, we saw that here when we broke above it, we started the parabolic run. So I'd say the Ichimoku cloud is kind of a secondary kind of indicator to look at here. The main indicator you need to be looking at, if you're looking at, hey, when will the bull market restart? When is there confirmation of a bull market? The 50-week SMA is what you need to be looking at. When we break above this red line, the 50-week SMA, that is indicative of the fact that a bull market has begun on Bitcoin. So That's kind of the video here, but I do want to talk about quickly a Twitter post that I saw here from JJ Cycles. This was recommended to me by one of my viewers, and he wanted my opinion on this. So JJ Cycles says, we're still in a bull market, right? And he posts this chart here, which is basically a curved line on Bitcoin. First of all, I don't like these curved line charts on the logarithmic scale. I think they're ridiculous because you can't curve a line on the logarithmic scale. It's simply impossible for the line to for price to keep up with that line. Now, he's essentially suggesting that, hey, Bitcoin's seen these kind of waves here. And you guys know my thoughts on Elliott wave theory. I think Elliott wave theory is absolutely ridiculous because it's very, very subjective as to what constitutes a wave. But without even getting into that too much, he's also drawing a conclusion using a fractal of a consolidation period lasting 485 days, which we saw in 2020 and 2019. And he's saying we're seeing that again right now. Now, first and foremost, you can't actually take a fractal from something you've only seen once and apply it as if it's a trend. A trend is something that needs to happen 3 times, right? Something that's only happened once is not even a coincidence. It's just a random data point. Something that happened twice would be a coincidence, and that would even be a stretch. But this is literally just a random data point on a chart that makes it look fancy and people think it's impressive. When in reality, he's literally pointing at nothing. That's the same thing as me saying this. He's doing the same thing as me going to this chart here and being like, oh, well, look, this lasted 10 days. This period here has lasted 10 days. So last time we saw a pump, so we have to see a pump. It's not TA, it's just speculation. And not even that, it's blind speculation to the point where it's just gambling. So I think it's ridiculous. And then furthermore, if we're looking at something like the logarithmic chart, and we look at what he actually did here, what he's saying is that Bitcoin, by around, I'm going to assume the month of October, is going to reach 200,000 USD. Now, use your brain for a little bit here, guys, and to the 2,600 people who like this post, use your brain for a little bit. If you think Bitcoin's going to go to 200,000 USD in a time in which we're going into a global economic recession, you are absolutely delusional. But that's my thoughts on that post, and that's my thoughts on posts like that. And you'll notice that these kind of posts from these big Twitter accounts, even though they're completely brainless and it's not even TA, it's literally just gibberish, they get so much attention. He has 125,000 followers and he has mechanical engineer in his bio, which is probably half the reason people follow him because they think he's smart. But in reality, I could just say the same thing. I could just put mechanical engineer in my bio and post brainless stuff like this and get 1 million followers. It's not actual TA. It doesn't change the fact that it's not based in reality. And it's quite sad, to be honest. But moving forward, I think we've done enough there. It's a bit of a hobby of mine, trashing trashy Twitter influencers in the cryptocurrency space, posting brainless charts because it's just hilarious. It's good comedy, and it's good comedy seeing them get wrecked as well while they mislead thousands of people into losing money. But moving forward, if you want to learn how to trade, first and foremost, check out Crypto Academy. If you want a platform to trade on, an exchange to trade on, I highly recommend Binance. I also highly recommend the BitGet exchange. Why do I recommend BitGet? BitGet is my favorite exchange for futures and sometimes spot trading depending on the pair, but generally speaking, it's my favorite exchange for futures. Why? Because it has half the trading fees of Binance. As you guys know, I'm a trader. I trade on a regular basis. With the amount of capital I'm trading with, the fees do stack up, and BitGet halving Binance's trading fees is a big plus in my books. Not only that, but they also have systems in place to get rid of scam wicks. And so when you are trading futures, you see scam wicks on Binance and exchanges like Coinbase, etc., that kind of flush you out of your position when they didn't actually represent the actual price action. BitGet has systems in place to prevent that happening, and so you will not get scammed out of your money. You will only be kind of in trades reflecting the actual price action. They've also added in a new referral program and reward center in which you can gain up to $4,000 in rewards by completing a few tasks. Go ahead and check out BitGet Exchange using my referral link in the description below. Without further ado, guys, I'm going to end the video there. Chuck some questions in the comment section. Haven't had many questions from the Wolfpack recently regarding the market. I think it's because the people are a little bit bored and they've had their questions answered already. But if you want to get some of your questions answered, I'm happy to chuck back in a segment at the end of the video where I answer some questions from the comment section, go into some charts for you guys. I'm excited to do that. I'm excited to get live streams started again in the future. I want to keep some attention in the market because people lose attention during these boring periods. They get bored, they move on to other things. I understand that. But you guys really need to understand that this is the best time you can be learning about the market. Even though it's not the most exciting time, if you hone your skills here, you harness your abilities, and you learn and improve, when the bear market bottom does come, you'll be in a much better position than you would be if you're just sitting there playing video games all day and just, wasting your time, basically. But without further ado, again, I'll end the video there. Thanks for watching. Catch you in the next one. Cheers.